Welcome back to Primary Short China Investment. Peng Guo and I are here with show E7, and we're going through some of the data, specifically the consumer data. And there's plenty of chatter from the cheap seats that now is the time for Chinese stocks. We're not making that argument here this week, but we're looking at spending and behavior of the Chinese consumer, and we're looking at Beijing's data. So data doesn't lie. And some of it is good, some of it is gloomy. Let's get into it. Retail sales category through August, as printed by the National Bureau of Statistics. There's plenty to unpack here, but right off the top, overall growth is 2.1%. The consumer is telling us something. This isn't services, this is what people are buying. A couple of things jump out. Grain and oil, foodstuff, beverage, tobacco, and liquor is a huge jump, 8.9%. And it's a very big category, as you can see in terms of size. Tobacco and liquor is the number one portion of that at 8% growth. And there's an old expression on Wall Street that says, buy the sin stocks, because when the economy is good, people celebrate. And also buy the sin stocks, because when the economy is bad, well, people unfortunately abuse these products. Tobacco and liquor is up 8% year to date. Another thing that jumped out was gold and silver and automobiles, both of them down 2.5 and 2.4% respectively. If you looked at the headlines, you'd think, wow, Chinese autos are doing great and gold is booming. So where is the disconnect here? And then the other thing is garments, footwear, hats, and knitwear is basically flat. Sports and recreation is up a lot, but from a low base. Peng Guo, anything in this that jumped out at you as being either weird or not consistent?
I think that's totally agree with that. In the recession period, people get emotional, so they purchase more addictive product.
Yeah. If the consumer is 40% of GDP and growth is 2.1%, that means exports and government spending is going to have to make up the remainder for GDP growth. And China's monthly exports have been keeping up. We've covered it a lot. To the US is down a bit, but to other Asian countries and to Europe has been ticking back up. In terms of where the consumer is spending, though, we've seen some anecdotal evidence about booming restaurants and booming domestic travel. And that's one way to describe it. Travel for the Mid-Autumn Festival cracked 107 million domestic trips, which finally topped the pre-COVID numbers. But that means in half a decade, domestic travel has grown a total of 6.3%. And that's not great. And outbound travel is stuck at 60% of pre-COVID levels. Those are pretty bad numbers. Anything to add there, Peng Guo?
Yeah, I think it's all about the money. So first, let's see the income. According to the National Bureau of the Statistics, in the 2024, for the first half a year, the average resident income is about 20,700. Its growth probably around 5.3%. So that's really need a split to the city resident and the country resident. So city resident, they growth probably around 4.6%, and the country resident increased 6.8%. So I think looks like still growth, but we know that all the asset price get significantly dropped.
Yeah.
So while people saw these situations, they lose the confidence to consume. That's probably the major reason. And the money just in the bank, they don't want to spend it, and they prepare for the future uncertainty and probably the debt. And also for the inflation, looks like fine. So it's looks like inflation increased to the 0.8%, much lower than the 3% for the country expected. But overall, I think the entire society's inflation or deflation not really have the big impact to that. But according to the percentage for the residents' consumptions, it's pretty clear. The tobacco, food, and drink they cover 30%, 31%. So that is the largest part. And the second largest part is resident. So probably maybe housing and rental related fees is 22%. The third one is health care, so it's 9.3%. So those three add them together, it's almost 63 or 64%. So that's really take a majority of the disposable income, and plus communication and the transportation, let's take another 3%. Add all those together, it's almost close to the 80%. So people really have no money to buy the stock.
That's also almost all of that is non-discretionary, right? You have to, yeah, I mean, maybe some of the food and drink, but there's, some minimum food and drink that's necessity, right?
Yeah.
Consumer, transport, your housing, healthcare, all of that is sort of non-discretional spending, and that's turning up in the numbers. I saw one piece of one data point which was interesting was the mooncake. We just finished the Mid-Autumn Festival, and the Yuebing sales really drop off, right? So even the number and the revenue and the price range are all down from 2023. And that really affects the consumer's spending. Although their income may be keeping pace, it's what you said earlier, Peng Guo, it's their savings and asset value that has gone down, and people really feel that pinch.
Maotai is done as well.
Yeah, exactly. Although the spending is up in that sector, right?
Yeah.
Yeah. Well, I think that's
Another very important thing is I think even the export looks like good, and the overseas companies they do overseas business, but the money is not flow back to the China. So most of them they probably still stay outside, and due to the high interest rate from the United States. So those kind of money is also pretty big. I think it probably reached to the $1 trillion. After the Fed dropped the interest rate,
Mhm.
it should flow back to the China. That
Well,
will also have an impact.
yeah, it's got to flow back. Well, it's going to take a lot more than just a Fed cut, because if you look at 10-year rates, right, the 10-year in China is 2.057. The 10-year in the US is 3.71. That's a big pickup if you're holding US dollar. I think you're probably going to see some flowing back if the spread narrows. I think we're going to leave it there with show E7. Thanks for tuning in, and we'll see you next week.
Thank you.